new chapter, that is your chapter 2 of macroeconomics, national income and accounting. So first of all, with the name itself, we need to understand what does the chapter name suggest. So there are three words: national, income, and accounting. So who can tell me? National. What is nation? National. Can I say the entire country, the entire nation is nothing but national? What is income then? Okay. Income basically is something which an individual person receives for providing its services or goods, will be called as income. Accounting is nothing but making an accountancy, accounts of it. How much you have received, how much is the expenditure, how much is the receipts, income, everything needs to be maintained in account. That is nothing but your accounting, maintenance of accountancy. So this basically chapter is going to talk about the income of entire nation, the entire country. Which country? Our country, India. It is not bothered about the other countries. It does not have any concern, anything with the other countries. Its main focus is on India. So we are going to study about the national income accounting, wherein we are going to understand the income of the nation, how to calculate the income of the nation. For calculating the income of the nation, there are different methods which we are going to see. So all of these things are the just overview of the chapter. Today is a theoretical part. In today's class, we are going to see the theory of basics of the basic starting of national income. So two topics we will be covering in today's session. First, meaning of national income, and second, circular flow of national income. What is circular flow of national income? How does it flows? And so on. So that we will be looking today in the session. Two things. Okay. So this is a theoretical part from national income. Probably from next session or next to next session of economics, we will be starting with the numerical part. So to understand numericals or to solve numerical questions, it is important for us to understand each and everything of the chapter. You should not feel that, okay, theoretical part, I will not look at it because numerical questions are more important. Though numerical questions are important, for that also you should know the basics of the theory of the chapter. So that is why the theory of the chapter is also equally important. So national income, as I said, under microeconomics, you all might have studied about individual income. Okay, I guess there is power failure here. Let us see till the time we can continue, we'll continue. In microeconomics, you all would have studied about individual income. What is the individual income? How to analyze the individual income. But when we study macroeconomics, it is to do something with the whole economy, the entire economy, the nation's economy. So under macroeconomics, we study about national income. And this is what the entire chapter's focus is on. This is what is the chapter going to talk about, the nation's income, the entire country's income. There are different ways, theoretical ways as well as practicals. You're going to see each and everything under this chapter. This chapter is going to be a little bit lengthier as compared to your other chapters, but it is very interesting if you all enjoy it, understand it, and then study. And as I am saying that you need to understand all the terminologies, all the terms from the basics from now, so that whenever you are solving numerical questions or further you will see more theoretical part, it will be helpful for you that because you know the basics, because you know the concepts, right? So first of all, let us see or talk about the meaning of national income. So here I told you two words comprises of two words, national and income. National means the entire country. And income means nothing but the amount received by the country. How does the country receives money? Of course, it has provided some kind of goods and services because of which the country is incurring income, right? So now the entire country is going to receive income, is going to receive money. How? By selling the goods and services from different sectors. Now comes sectors. You have to know or you have to understand the four major sectors of the economy. Now when I talk about the sectors which are there, it can be primary, secondary, tertiary. But when I say the economical, specify all these four sectors, specify the sectors. In that specification, we go into much more detailed form, and then we have four different specific sectors. That is your household, then you have firms, then you have government, and lastly you have foreign sector. Households are nothing but the people like us who are going to do the consumption of goods and services. Firms are nothing but the businesses who are going to produce the goods and services. Now, when we talk about firms over here, we have to keep this in our mind. Firms means only the private firms, only the private companies. Now, what is private? See, any company can be of two forms. It can be a private company, it can be a government company. Government company means everything is owned and controlled by the government, and private company means everything is owned and controlled by the private people. Though when we talk about firms over here, it is going to include only the private firms. It is not going to include government firms. Why? Because we have a whole new classification for government sector. So because of which we will be focusing only on for private firms here, and here we will be focusing only on the government firms or government businesses. Here we will be not including private firms. Lastly comes foreign sector. Foreign sector comprises of export and import. Export, any idea? Hmm.
Like we are selling our products, the products produced in our country to other different markets in the other countries.
And what is import then?
The products that are coming from other countries to our countries for the purpose of consumption.
Yes. Vocal, yes, you might because UPS is working now. Okay, what we'll do is we'll wait for some time, then let power come back, then we will continue, or else it is disturbing for you all, right? So wait in the session for 10 minutes. We'll see what to do. Okay, everyone is here, back. We'll continue.
Yes, sir.
Okay. So as we were talking about the sectors of the economy, wherein I said that the rough, you can say basically classification is primary, secondary, tertiary. But when we go in depth and when we do the classification in depth, in detail, it classifies as household, firms, government, foreign sector. Households are people like us which are going to do the consumption of goods and services in the economy. Firms are the people, are the organization which are going to produce those goods and services for us. When we talk about firms, it will include only private firms. It will not include government firms. Then comes government firms. All the transactions related to government will be classified under government sector. And lastly comes foreign sector, which includes of exporting and importing of goods and services. Exporting of goods and services means selling of goods and services, whereas importing of goods and services means buying of goods and services. So this is export and import. So these four sectors we are going to study in more depth, but let us first continue with this much. Meaning of national income. So national income means nothing but the value of goods and services produced by a country during a financial year. So national income means nothing but the total value, total money. Value over here means the value as per money of goods and services which is produced in the country during that financial year. What do we mean by financial year? Any idea? Anyone? What is a financial year?
April 1 to March 20.
Financial year, we also address it as fiscal year. Yes. So it is nothing but a time period of 1 year in which, yes, very good, Bradula, in which every company or every organization does its accountancy and closing of books and everything. There are basically two dates is considered as financial year, from 1st Jan to 31st December, or from 1st April to 31st March. In India, maximum organization follows this as a financial year, but many companies, many organizations do follow this financial year as well. But we are going to consider this as the standard financial year. So it is the net result of all the economic activities of any country during a period of 1 year and is valued in terms of money. So in 1 year, the country has done the production of how much goods and services and sold how many goods and services. The value of that amount will be called as nothing but national income. Economic activities. What do we mean by the term economic activities? Yes,
Economic activities that generate income.
very good. Economic activities are those activities which will generate income, which has relationship with money. Non-economic activities are those activities which do not have any involvement of money. Examples of economic activity can be teacher teaching in school, doctor treating his patient, and so on. Example of non-economic activities can be mother cooking food for the family, teacher teaching his own son, wherein he will not charge fees. So that is why that will be a non-economic activity. So economic and non-economic, national income comes under the economic activities. Now comes the circular flow of national income. Circular flow. By the name itself, until now you all have gotten the rough idea. Circular flow means, first, circular means what? Nothing but a circle. Flow means the flow of goods and services, money, etc. And national income, so we know, is nothing but the money or the income earned by that particular country. We say that income of the country keeps on flowing on the circular shape. Your money of the country, money of the economy keeps on flowing in a circular shape. It has a circular shape. Now, why we have said that it is a circular shape, that we are going to see further. But as of for now, we have to understand that it is said income of the country flows in a circular shape. So it refers to cycle of generation of income in the production process, its distribution among the factors of production, and finally its circulation from household to firms in the form of consumption expenditure on goods and services produced by them. So this meaning of this sentence we will understand. First of all, let us understand or underline the important terms from the meaning given to you. Generation of income, circular flow. National income is nothing but the generation of income in the production process. What do we mean by production? What do we mean by the term production? Who can tell me?
Creation of goods and services.
Yes, production means nothing but manufacturing of goods and services. If your economy manufactures the goods and services, only then it will be able to sell those goods and services and generate income, right? So first and the foremost thing which the economy needs to do is the production of the goods and services. Next important thing comes is distribution of goods and services. Distribution means what? Once you have manufactured the goods and services, once you have produced the goods and services, are you going to keep it with yourself? No, you are going to produce it in the market, right? With the help of retailers, wholesalers, you are going to sell your product in the market. So once you have produced the goods and services, it needs to be distributed in the economy. If it is not distributed, if it is kept just like that, then it is going to get defected. It is going to go bad, right? If I am a producer, I am producing chocolates. I am producing the chocolates, but I am not distributing it in the economy. I am not giving it to anybody. I am just keeping it with myself. What will happen? Wastage of resources, wastage of time, wastage of money, or everything is a waste because I am not selling it in the market. But if I do proper distribution with the help of wholesalers and retailers, then my product will get sold out in the market, and in return I can incur some good amount of money. Next important word, the factors of production. What do we mean by factors of production? What is factors of production? Who can tell? Okay, come on. Factors of production. See, for manufacturing any goods and services, you need various factors, right? You need various things to manufacture the goods and services. You can't just get up one day and say, I want to manufacture the goods and services. For that, you will need factors, different factors which you are going to use for the production process, like capital, raw material, machinery, land, building. All of these things are the factors of production. But when we talk about the most important factors of production, see, factors of production, there are n numbers of factors of production. Because to manufacture the goods and services, you are going to require n number of factors which will help you in the production process. But when we talk about the major components of factors of production, then there are four major components: land, labor, capital, and entrepreneur. These are the major factors of production. Now, since we have talked about factors of production, can you all tell me what are the returns to these factors of production? Since you are making use of all of these factors in your production process, you have to give them something in return, right? You cannot say that I will be using all of these things for free of cost. If you are using somebody else's land, you have to give something in return. What will you give? What will you give to land? If I want to start my business and go and ask Gokul that, okay, Gokul, you have a land, please give me that land for an year, for a 2 year. and so that I can start my business on that land. So Gokul will say, okay, fine, you can take my land and work on it, but in return you will have to give me something. So what thing is he asking for?
Rent, no?
Huh?
Rent.
Very good. Rent. So the return to land is rent. What is the return to labor? If I have, very good. Capital. If I have taken capital loan from any financial institution, I will have to repay that loan. While repaying, I will have to also give what?
Interest.
Perfect. Very good. An entrepreneur, what does an entrepreneur get after going through lots of uncertainties and risks? Profit. Fine. So first important term was production. What is production? Why it is important? I told you. Second important term was distribution. What is distribution? Why it is important? That also I told you. Third was factors of production, wherein I told you that what are the factors of production and what are its returns. Now they say that all these three things, three important things, is going to get circulated between the household and the firms. Household and firms. All these three things will rotate between these two sectors. Always call them as sectors. Now how that we will see. Before that, what are the different phases of circular flow of income? So when we say circular flow of income, it has three important phases. What are those? So there are three different phases: generation phase, distribution phase, and disposition phase in circular flow of income, which is, we are going to change the diagram. So the phase has three different phases: generation phase, distribution phase, and disposition phase. First of all, what is generation phase? So in this phase, firm produces goods and services with the help of factor services. So first phase of circular flow of income is a generation phase. Generation phase is the phase where production of goods and services will take place with the help of factors of production. Generating, with the name itself we understand. Generation phase means we are generating something. So what we are generating? We are generating goods and services. With whose help? With the help of factors of production. So that is the first phase. Then comes your distribution phase. So as I already mentioned, distribution phase is your nothing but the phase wherein you are going to distribute the goods and services. So the phase involves the flow of factor income from firms to households. So basically distribution of goods and services. Firms will distribute the goods and services, and also these factors of production will receive their income in the form of rent, wages, interest, and profit. And lastly comes the disposition phase. So in this phase, income received by factors of production is spent on goods and services produced by firms. So lastly comes the disposition phase. In this phase, income, all the income which is received by the factors of production, they are going to again spend it on the goods and services which has been produced by the firms. All these phases will be easier for you all to understand once you see the diagram. So that we will see further. As of for now, see this diagram. Production phase is nothing but the phase wherein there is generation of income taking place. Income phase, distribution phase is the income phase, and expenditure phase is called as disposition phase. Now that we'll get to know or understand more in detail further. As of for now, next thing is stock and flow concept. What is stock and what is flow? So concept of stock and flow are used in macroeconomics very frequently. Very oftenly you are going to use the word stock and flow. Some of the macro variables relate to stock and some of the variables are flow. So stock and flow are the two different kind of concepts. Some variables of macroeconomics are related to stock and some variables of macroeconomics are related to flow. So it is important to understand the meaning of both stock and flow. So first is stock. What is stock? So stock variable refers to that variable which is measured at a particular point of time. The stock is that variable which is measured at a particular point of time. Everything which you measure at a particular point of time is called as stock. Example of stock is goods in godown as on 31st March 2019. It means stock variables are not time dimensional. So stock are basically those variables which are kept and which are measured at a particular point of time only. So these variables are not time dimensional. That means you cannot specify the time. You cannot say that, okay, weekly you are going to count, daily you are going to count, then monthly, yearly. It is not time dimensional, not time specific. And more examples like national wealth, money supply, all these concepts we are going to see further. Next is flow. What is flow? So it refers to that variable which is measured over a period of time. See, there is a small similarity. Stock is measured at a particular point of time, whereas flow is measured at over a period of time. Over a period of time. That means it can be measured on a monthly basis, on yearly basis, on daily basis, on quarterly basis. So it might have time dimensions. Example, production of goods during the month of January 2019. How much production did we do in the year 2019? That will be a flow variable, flow concept. Birth rate in the year 2018, national income in the year 2018 are flow variables. So anything which you count over a period of time is called as variable. The period of time could be a day, a week, a year. So for national income can be a flow variable. Why? Because you are going to calculate national income once in a year. So any variable which you calculate at a specific period of time, like on the basis of a day, weekly basis, yearly basis, monthly basis, then that will be categorized under the flow variable. So national income is the best example of flow variable because it is calculated yearly, on yearly basis. So flow variables are time dimensional as they are measured for a period of time. So that is why we say flow variables are time dimensional because it is measured on the basis of days, week, year, month, quarters, and so on. So one more example they have given you. Amount of water in tank is the quantity of water in stock in the tank at a given point of time. So just assume this is a tank and this is the water which is there in tank. This is the water kept in the tank. So when you go and check the tank, that is nothing. This is the stock of water. Okay, it is the stock of water which is kept in the tank. But when you put a tap against it and it starts flowing from that tap, then that will show what? That will show flow of water. So that means anything and everything which is measured at a particular point of time is stock, period of time is flow. Simple difference between stock and flow. One differentiation, proper differentiation they have given to us on the basis of meaning. Meaning, stock variables refers to that variable which is measured at a particular point of time. Any variable, any macroeconomic variable which you measure at a particular point of time will be called as a stock. And any variable which you measure over a period of time. Over a period of time means on yearly basis, on monthly basis, on quarterly basis. But stock you can go and measure at any point of time. It is not time specific, right? If there is a goods kept in my godown, in my warehouse, I can anytime go and check it. I can go now, then I can go in evening, I can again go at night. But that does not happen with the flow concept. Under flow, it is measured from for at a specific period, specific month, year, quarter, etc. Time dimension, it does not have any time dimension because as I said, we can go and check the stock anytime we want. Flow has time dimension because it is measured only at a period of time. Nature, it is a static concept. Stock is static. Why it is static? Because it is stagnant. It is not changing. It is like that, remaining like that only. Whereas flow is a dynamic concept because when it starts to flow, when you calculate the flow, it keeps on changing. So the things which can keep on changing is called as dynamic, and the things which remains constant or the same is called as static. Examples of stock: population of India as on 31st March 2018, total number of Maruti cars in Delhi, money supply in circulation, national wealth, quantity of wheat stored. These all are the examples of your stock concept. Whereas flow, number of births during 2018. Birth or what percent of birth has been taken place in 2018. Maruti cars, how many cars were manufactured in 2019, that you are measuring, and in 2020 again you will measure how many cars were manufactured. In between you will not put that efforts to measure the manufacturing of cars. So that is all. National income, because it is measured on a yearly basis. When we studied the meaning of national income, there itself we studied one line that is measured on the basis of financial year. Financial year means on the period of 1 year. Now, types of circular flow. Circular flow can be of two types. When we will study the circular flow of income diagram, the flow of the diagram will contain two different types. One flow will be a real flow and the second flow would be called as a money flow. So what is real flow? Basically, with real flow means nothing but the factors. First of all, let us just see the circular flow income diagram and then we will see all of these things. Yes, see, this is what all about we are studying. So if it is not clear, I will make it in the side, at the side also. When we study circular flow, it is assumed that there are only two sectors in the economy, that is household and firms. Again, it is expected that from where firms get the factors of production. Factors of production, that is land, labor, capital and enterprise, that is also called as factor services. Firms are going to get that factor services from where? Any idea? From where exactly the firm is going to get the factor services? Factor services means land, labor, capital. From where does the firm get all of these things? No? When any particular person starts its own business, from where that person is bringing the land, labors, this employees? Of course, from households. Households are going to provide land, labor, capital and enterprise to the firm. So that is why we say that households give factor services to the firms in the way of land, labor and capital. In return, firms give them factor payments. In return, firm is going to pay them factor payments in the form of rent, wages, interest and profit. Now, this was the first circle wherein household is giving factor services to the firms, firms giving factor payment to the factor services in the form of rent, wages, interest, profit. Second, Now, household, when receive this factor payment, is again going to consume the goods and services which is been provided by the firms, which is called as consumption expenditure. Expenditure means what? Expense which the individual is making, the money which the individual is spending. And consumption means what? To consume that particular product. Consumption expenditure. So household is going to do the consumption of goods and services which is produced by the firms, and in return firms are going to provide goods and services to house. This is what basically the circular flow of income talks about. So once again, circular flow of income will consider that there are only two sectors in the economy, household and firms. It is assumed or it is said that households are households are going to give what? Households are going to give factor services to firms. Factor services in the form of land, labor, capital and entrepreneur. In return, firms will give them factor payment, that is rent, wages, interest and profit. So this is your first circle, outer circle. This is a outer circle. Now second thing, again I am elaborating it and making a different diagram. Household and firms are there. Again it is expected that household is going to do the consumption expenditure. Household is going to do the consumption expenditure. Whatever the goods and services which the firms are making, households are going to spend their money on those goods and services and they are going to consume those. So they are doing consumption, and in return firms are going to give them factor payments. In return they are going to give them goods and services. Firms are giving you goods and services, businesses are giving you goods and services. If there would have been no business, who would have given you the goods and services? Right? So businesses are the important part. Now comes the concept which we were looking at, that is real flow and money flow. Real flow means which involves the flow of goods and services or any kind of services which does not involve any money. But money flow is the kind of flow which is going to involve money in it. So if you see over here, factor payment and factor services are going to involve basically money, and that is why it will come under money flow. Let us first of all come back again to our part, read what is money flow and uh, real flow. Real flow refers to the flow of factor services from household to firms and corresponding flow of goods and services from firms to household. So if you will see, we already said that household provides factor services to the firm and in return firms provides goods and services. So wherever this service term is using, service term means we are providing goods and services. Here there is nothing to do with money. Since there is no involvement of money, it will be called as a real flow. When the involvement of money will take place, it will be called as a money flow. So if they have again specified the chart that this is your household, this is your firm. Household gives factor services in the form of land, labor, capital and entrepreneur. In return, firms gives goods and services. So this line, this flow basically will be called as real flow because it does not involve any money. See over here, it is factor service and goods and services. Can you see any involvement of money over here? Is there money involved here? At one place the factor services is involved and at the other place goods and services are involved. So when money is not involved, that kind of flow is called as real flow. Is it clear till here? Any doubt? Did you understand what is circular flow of national income? At the beginning of the session, when I explained you all the sectors of economy, there are sectors, right? Household, firms, government and foreign sector. But when we study circular flow of national income, it is said that we are going to consider that there are only two sectors in the economy, and this is purely an assumption. We are assuming that there are no four sectors in the economy, there are only two sectors, household and firms. In between that, we have explained you that how things are going to flow between household and firms. Since they flow in between to each other, they are called as circular flow. They are in the circular motion. Household to firm, firm to household. Anything which is going from household to firm is coming back in another format to firms to household. So there are four things basically: factor services, factor payments, goods and services, and your consumption expenditure. So wherever now in the inner circle, two things are coming: consumption expenditure and factor payments. So here there is an involvement of expenditure, nothing but the expense, the money. So there is an involvement of money, and factor payment also is done in the form of money, that is rent, wages, interest and profit. So that also involves money. So here also there is an involvement of money. So that circular flow will be called as your money flow, and the other one will be called as real flow. So real flow is also known as there is only exchange of goods and services between the two sectors without involvement of any money. Real flow determines the magnitude of growth process in an economy. Real flow is the very important kind of a flow which will decide the growth of the economy. So according to the real flow, we will understand that how much production of goods and services has been done, how much goods are produced in the economy, how much factor services are there in the economy. Everything will be understood from your real flow. That is why real flow is the most important flow of national income. So that was your first kind of flow. One example they have given: where more factor services are offered to firms, then volume of production will be more, speed up the process of economic growth. Now this is but obvious, right? If I have 10 laborers, then they might produce only 10 units per day. But if I have 15 laborers, they will be able to produce 15 units per day. So what do we understand from this thing? We understand that as and when we increase our factors of production, our production process also increases. We speed up. Our quantity also increases. So that is what they are saying. So that was the real flow, which does not involve any money, which involves only and only the what? Goods and services, which household provides to firms and firms provides to households. What I will do is, first of all, money flow I'll explain. Then again we will go to circular flow of national income. We will see if you all have understood or not clearly. If not, then I'll explain it once more from the beginning, and then I'll try to understand. Just as of now, understand money flow is the flow of circular flow of national income, which will involve the money, which will involve the transaction. So this any flow which involves money between the households and the firms will be called as money flow. Money flow is also known as nominal flow. Very important. Real flow is known as physical flow. Money flow is known as nominal flow. It involves exchange of money between the two sectors. So it will be involving exchange of money between the two sectors. Differentiation will come to it towards it next. First, let us see circular flow of income. First of all, you all give a read to these two lines, understand it, read it and try to understand the meaning, then I will explain. Give a read to this 2 points. Read it carefully. Done? Now, first of all, recall. When I said that there are different sectors in the economy, I said there are 4 sectors in the economy: households, firms, government, foreign sector. Household means consumption expenditure, people like us who are going to do the consumption of goods and services. Firms means all the private firms who does the production of goods and services. Government means the government firms who are going to do the production of goods and services. Foreign exporting and importing of goods and services. Right? These are the 4 major economic sectors. Out of which, when we study the circular flow of national income, we are going to put an assumption that there are only 2 sectors in the economy. These 2 sectors does not exist. Only these 2 sectors exist, that is household and firms. Clear till here, one by one. Take one points. First point, I said there are 4. Second point, I said that we are going to assume under circular flow of national income that there are only 2 sectors in the economy, that is household and firms. We are going to assume government sector and foreign sector does not exist. 4 points till now. Fine. Now let us give a read to the point. A simple economy assumes the existence of only 2 sectors, that is in household sector and firm sector. Households are the owners of factors of production and consumers of goods and services. Now they have specified who are households. So households are termed as owners of production, factors of production, consumers, and as well as they are the consumers. Now see, put your logic. Okay. Say suppose this is your country and this is your business. Fine. This is your country, India. In India, this is a small part where your business is existing. Fine. So to run a business, you need factors of production. Different factors of production you need. Like for say suppose land, you need labor, you need capital, you need entrepreneur. So land, outsider is going to give you. Labor, you are hiring from the environment, the people living in India, you are hiring from here. Capital, you are taking from the bank, financial institution, which is again the outside part of your business. Entrepreneur, it is, you are also coming from the outside only. You are opening the business, you have started the business. This is also considered as an outsider only. So basically, when you are starting the business, all the factors of production which are going to be required are coming from outside the business, outside the organization. So that is why we are called as, or we are termed as households, and these households are going to basically do the consumption expenditure, who are basically going to consume the goods and services in the economy. So that is why we are termed as households. We are also termed as consumption expenditure. Okay, so that is your one sector. Another thing comes is firms. So firms, private firms, all the private firms, the production of goods and services which are done by the private firms will be coming over here. So When we study circular flow of national income under two-sector economy, we are going to assume that there are only two sectors, household and firm. So everything is getting exchanged between household and firms only. There is no involvement of foreign sector. Or each and everything is getting exchanged between household and firms. So firms, household, we already understood. Household are termed as owners of factors of production because households are the people who are going to provide the factors of production to the business, as well as they are also termed as consumers of goods and services because they are going to consume the goods and services which is being produced in the economy. So that is household. Second comes firms. So firms, what does firms do? So it produce goods and services and sell them to households. So firms are the entities or the organizations which are going to do the production of goods and services and sell them to the households. It is the simplest form of closed economy in which there is no government sector and no foreign trade. No foreign trade means what? Buying and selling of goods and services with foreign countries. Now one more term has come into the picture, closed economy. What is closed economy? Who can tell me? Yes, what is closed economy? Economy can be of two types. We are aware of that. It can be an open economy. It can be a closed economy. So what do we mean by these terms? Any idea? Anyone? Anybody wants to give guesses? Then that is also fine.
An open economy includes foreign sector, while closed does not.
Okay, very good. Anybody else? So basically, open economy is the kind of economy which does the trading of goods and services with the foreign sectors, whereas closed economy is the type of economy which does not do the trading of goods and services with foreign countries. They will only do the trading of goods and services within the geographical boundaries within the country. So that is closed economy and open economy. So earlier, prior independence, our economy, but then post reforms and everything, when we started developing, our economy became open economy. Now you can see our country is doing trading of goods and services with other foreign countries as well. Fine. So open economy and closed economy. Very important. Further also you are going to study a lot about it in economics subject. So I don't want anybody to forget about it. If you can't remember, then note it somewhere, or if you can remember, then you have to make sure you don't forget in future. Fine. So when we study circular flow of national income under two-sector economy, we are going to assume that there are only two sectors in the economy, that is the households and firms. Households are known as the owners of factors of production and also the consumers of goods and services. Firms are the organizations which are going to produce the goods and services to sell them in the household. Closed economy, now see here we have given you the meaning, is an economy which has no economic relations with the rest of the world. Open economy is an economy which has economic relations with the rest of the world. Economy will not do the trading of goods and services with the foreign countries, whereas open economy is going to get indulged in the trading of goods and services with the foreign companies, foreign countries. In order to make our analysis simple, we have made some assumptions. Now, to understand the circular flow of national income in two-sector economy, we have made certain assumptions. What do we mean by assumptions? Come on, what do we mean by the term assumption? In 11th standard also, we have studied the term assumptions. We have also studied the assumptions in various laws or concepts and theories. So what do we mean by assumptions exactly? there any?
Yes, ma'am.
Assumptions. क्या होता है assumptions? It was not that big rocket science, my students. See, assumptions are the kind of hypothesis or kind of stories which are made in order to understand the concepts and theories in the easier format. That is the reason why economists have given assumptions before any law or stating any law or stating any theory, so that that particular law or theory becomes an easier for us. So many a times you will see that many laws, theories or concepts will have assumptions. Those assumptions are might be they can be an impractical assumption, it can be a practical assumption. At times it can be true, at times it can be false, but you don't have to go in that technicality. You just have to assume, you just have to think that whatever it is written, it is correct, and that is the assumption, that's all. You don't have to go and understand and say that no, this is true, this is false, this is how can this be an assumption? It is not possible in practical world. Here, there is nothing to do with the practicality. There can be few assumptions which might be relatable to the practical life, real life, but there might be assumptions which are not related to the practical life. So in that case, you don't have to go in depth in detail. You just have to understand that these are the assumptions which are given to you in order to make the concept easier to understand. So that is what the assumptions are. So again, for circular plus national income in two-sector economy, they have given you few assumptions. You have to make the note of those assumptions and then understand the concept. So before going towards the concept, let us take 5 minutes break. Till then, if you all don't want to go on a break, if you want, you can go through the circular flow and try to understand. With the arrows, you will be able to understand that what is going there and how. Fine. So it's 7:16, 7:26 till 7:26. Everybody should be back again. Fine. If you all don't want to go for a break, you all can read and analyze the circular flow of national income in two-sector economy. I am going to explain you once again once we come back from break. Okay, let us continue. Everyone is back. Yes, should I start? Let us start. Yes, everyone. Should I start?
Yes, ma'am.
Okay. So, before going on a break, I'll explain you all what is the meaning of assumptions, and it is very important to understand the concepts, theories, laws, and everything. So, do not never go in depth knowledge of assumptions. Assumptions are always made for making the concept easier. That is the reason why we make assumptions. Fine, now you have already seen the circular flow of national income in two-sector economy. Let us first see the assumptions and then come back on the diagram. So the assumption, first assumption says there are only sectors in the economy, two sectors in the economy, that is household and firm. So first assumption says that in circular flow of national income, it is assumed that there are only two sectors, that is household and firms. We know who are households. Households are also called as owners of factors of production, and they are the consumers of goods and services. Firms are the organization who are going to do the production of goods and services. When we talk about firms, it only includes private firms. It does not include government firms. Second assumption, it means there is no government and foreign sector. So as we said, there are total four sectors in the economy, but under circular flow of national income in two-sector economy, we are going to consider only the two sectors. We are not going to consider the other two sectors, that is government and foreign sector. Third, household sector supplies factor services only to firms, and the firms in higher factor services only from households. Third assumption is that there are only two sectors in the economy, households and firms, and it is assumed that household is going to supply the factor services to the firms, and firms will also supply the goods and services only to household. This is the third assumption. Next, firms produce goods and services and sell their entire output to the household. Now, the third assumption is the entire goods which has been produced by the firms, by the private firms, are going to be sold out to the only households. They will not sell any good, any services to apart from households. That is not even possible also, because we have already made an assumption that whatever exchanging is going to take place of goods and services, of factor services, factor payment, consumption, everything is going to take between these two sectors only. Household receive factor income for their services and spend the entire household amount on consumption of goods and services. See from where income is coming. My income is coming from the organization where I am providing them my services. When I provide them my services, they will give me some money in return. Once I get that money in return, what I will do? I will spend it on consumption. So just imagine I am one of the person who belongs to an household. Then I go to firm and give my factor services. In return, firm will give me a factor payment. Say suppose I am working as a labor with this firm, then in return the firm will give me wages. Yes. So it is assumed that household will give everything and anything to firms, In return, firms will also give anything and everything to household. Then there are no savings in the economy. Neither the household save from their income nor the firm save from their profit. Now, next assumption they are saying that there is no savings happening in the economy. Neither the households are saving. See, households will save from what? Household will save from their income and firms will save from their profit. So say suppose there is one person called as Ram. Ram's income is 100 rupees. Then he is spending entire 100 rupees on firms, on purchasing of goods and services which is being produced by the firm. He is not saving any single penny. Any single rupee is not saved by Ram. Same ways, the firm is also getting profit of say suppose 200 rupees. Entire 200 rupees the firm is spending in factor payments or in the form of investment or any such thing like that. But in totality, there is no savings. No savings is done by household. Neither the savings are done by the firm. So this will be another assumption that no savings in the economy is taking place because there are only two sectors in the economy, household and firms. Household receives income, firms receive profit. And it is assumed that there is no saving done in the economy. Neither the household are saving the money, nor firms are doing any kind of savings from their profit. Then they say the outer loop of diagram shows the real flow, that is flow of factor services from household to firms and corresponding flow of goods and services from firms to household. So the outer circle which we saw in the diagram of circular flow of national income in two-sector economy, that depicts real flow. What is real flow? We already saw real flow is nothing but the flow of goods and services between household and firms. There is no involvement of flow of money. Only the services are getting involved. Only the services are getting flowed. And the inner loop shows the money flow. So flow because it depicts the flow of factor payments from firms to household and the corresponding flow of consumption expenditure from household to firms. So if we talk about the inner flow, it talks about the money, it talks about the payment related stuff. So since it talks about the money, it will be called as money flow. So it must be noted that entire amount of money which is paid by firms as factor payment is paid back by the factor owner to the firm. So there is a circular flow or a continuous flow of income. So basically we need to understand that when we talk about the circular flow of national income between household and firms, everything is getting exchanged between only these two sectors. Only they are exchanging factor payment, factor services, or consumption expenditure, or goods and services, right? Then finally they say that in the circular flow of income, production generates factor income which is converted into expenditure. When you produce the goods and services, you start selling those goods and services. The flow of income continues as production is continuously active due to never-ending human wants. So we know human wants are unlimited. They are going to take place on a regular basis. So the circular flow of national income also is a continuous in the nature. It is going to continuously flow from household to firms, firms to household, household to firms, firms to household. Likewise, it is going to continuously take place and hence it makes the flow of income as circular in. Again coming back towards the diagram and now I'll explain it. The outer circle is called as real flow. The inner circle is called as money flow. So if you can see, outer circle is flowing factor services and goods and services. So you can clearly see that here there is no involvement of any kind of money, cash or anything. So where there is no involvement of money, no transactions are taking place, then that kind of flow will be called as real flow. Whereas if you see the inner circle which is doing the transformation of consumption expenditure and factor payments. So in this case, money is involved. Consumption expenditure, it is an expense. Now say suppose I am in household, I go to a firm, I will purchase the goods and services. In return, I will have to pay some money. If I am the household, this is the firm. I go to the household to buy goods and services. Firm in return, firm will give me goods and services, and in return, I have to pay some money. I have to give money to the firm. So this payment of money is nothing but the expenditure for me. The expenditure involves money, consumption expenditure, and factor payments. Factor payments means, as we already discussed, since we are providing factors of production to the firms will in return have to give us factor payments in the form of rent, wages, interest, and capital. So yes, that is also done in the form of money. So that is also the money flow. Once again, I will quickly revise everything. Not everything, first of all, just the circular flow of national income. Circular flow of national income, before that I said there are 4 sectors in the economy. But when we study circular flow of national income in 2 sectors, we are going to consider only the 2 sectors of the economy, household and firms. In the outer circle, what we are doing, household provides factor services in the form of land, labor, capital and entrepreneurs to the firms. In return of factor services, firms will give the households goods and services. Household will give factor services to firms in the form of land, labor, capital, entrepreneur. Firms in return will give goods and services to the households. That was the outer circle. Coming to the inner circle, household does consumption expenditure or household expenses, puts their money to buy the goods and services from the firms. In return, firms give them factor payment in the form of rent, wages, interest and profit. Outer circle involves the exchange of factor services and goods and services. Hence, there is no involvement of money, so it will be called as real flow. Inner circle involves consumption expenditure and factor payments in the form of money, so they will be referred to as money flow. So, this is what the circular flow of national income under 2-sector economy is. Assumptions we saw, we understood that how the transfer is taking place, real flow, money flow, stock concept, flow concept, everything we saw. Now coming back to the difference between real flow and money flow, quickly we'll see this. Meaning, so it is the flow of goods and services between firms and households. Yes. Money flow is also the flow of money between the two. Very similar. Real flow is the flow of goods and services between the firms and households. Money flow is the flow of money between the between the firms and households. Kind of exchange. So real flow involves exchange of goods and services. Money flow involves the exchange of money. Difficulties in exchange. There may be difficult of barter system in exchange of goods and services, goods and factor services. There is no such difficulty in case of money flow. So when we talk about real flow is the flow which is taking place between firms and households in respect to goods and services. So they say there might be a problem when we did not have money and we used to follow barter system. What is barter system? Any idea? What do we mean by barter system? No? You haven't heard about it earlier? Barter system, see, money has come into the picture after a very long time. Earlier we did not had anything such called as money. What we used to do, how we used to exchange the goods and services in the form of barter system. Barter system means, say suppose there are two people A and B. A has rice and B has wheat. So what they will do, they will exchange their goods. They will not pay money to each other because at that point of time we did not have the concept of money. We used to trade goods for goods. We used to exchange goods for goods. So if I want rice, A want rice, B want wheat, then they will come together and do the exchange of their goods. Same way, if I want, say suppose I want a shoe and there is one more person called as Ram, he wants a cloth. So if I have a shoes and if he has a cloth, we can easily exchange our shoes and clothes. We will not exchange money because earlier days we don't had the concept of money. Money has evolved in recent years. So that will also be the next chapter, that how money has evolved and barter. We used to study barter system. We used to do all the transactions with barter system. That will be studying in the next chapter. So here, if the real flow, when we do the exchanging of goods for goods, there is a very big challenge because at times it is possible that B wants rice but A does not want meat. Then in that case, what they will do? So there is a challenge in between that when we follow barter system. And what is the alternative name? Alternative name for real flow is physical flow. For money flow, it is nominal flow. So basically, real flow is also called as physical flow. Money flow is called as